Now numbers coming out from our parent, Comcast, which the bottom line number is, you don't necessarily see Comcast do this. They're usually pretty close, but 76 cents is well above the street estimate of 68 cents a share. Stock at this point looks like it has been down. It's been, that's a daily chart there. It's now down 1.25%. The revenue number overall looks like it might be a little bit shy of expectations. The company, though, points out that this year there's no Olympics and there's no Super Bowl, and that typically analysts have trouble seeing exactly how to model that into their numbers. A lot of the other numbers are like free cash flow.
That's an important number
way up.
that Street watches. Free cash flow up 49%.
Up 49%.
4.6 billion versus the just 3.4 billion that the Street was expecting.
But that's like 35% above what Wall Street was expecting.
Yeah.
Then you look, everybody always looks for the cord cutters, but if you just look at net customer relationships, which includes, that type of stuff, the video customers are down 121,000, which is worse than last year.
I don't think that surprises the
Street.
I read an analyst report yesterday suggesting that the video customer losses might be worse than expected,
right,
because the company has said it's not going to chase those. They're much more interested in the high-speed internet customer.
And overall, net change in customer relationships up 300,000, which I think
high-speed
includes
internet
Sky
customers were up
too,
by 375,000.
Yeah.
That beat the Street's expectations.
The video, the business high-speed internet.
Well, they're working a lot more with those customers and giving them a new box you can rent for $5 that will give you a lot of the video aspects to it, too.
Yeah, the revenue number was 26.9, and the Street was at 27.2. So at first blush, that may have been part of the, I don't know.
And the free cash flow beat, I mean, if just for some insight into that, cable communications CapEx down 19% year over year in the quarter. So it's now, for this last quarter, cable CapEx was 9.5% of cable revenue compared to 12.3% a year ago. So there's obviously flexibility in there in how much you spend on CapEx, but that seems to be at least some source of the higher free cash.
There's a lot in here about Sky, obviously, as well. Think about what you have to talk about with Comcast. You got to talk about NBC's results, and that's multifaceted in and of itself in terms of both broadcasts as well as all the cable properties. And then you got theme parks, too, which I think the theme parks were kind of flat. Was it not?
It was consistent with the prior year, $1.3 billion in terms of revenue. But part of that reflects the timing of most spring breaks. Remember, spring breaks this year a lot later because Easter was
second
later this
quarter.
year.
Yeah, so that makes a difference as well.
It was the first quarter of 2018. It was second quarter of 2019. So you could see some better numbers in the second quarter.
For years after the acquisition, that was a big.
That was a big surprise.
Big surprise and a lot of growth. But
all the money that they've plowed into it comes back in spades. It's been a huge CapEx spending, but with great results for that as well.